Welcome, ladies and gentlemen, to our next transformative masterclass today on a very crucial topic building blocks to financial well being. I'm Manju Dake. I'm building insurance advisory practice here at One Finance, and I'm thrilled to be your host for the day. Before moving to directly to building blocks to financial well being, that is today's topics, let us have a quick glimpse on the quick updates on our previous masterclass. Yeah. So the previous masterclass was on yet another important topic, national pension system and effective retirement vehicle. Now, whether you're a young professional starting your career or you are a seasoned investor, it is quite perennial today to know about national pension system. And this is just a beautiful sketch and a glimpse of what we did in the last masterclass. So national pension system, we stressed upon its flexibility, the benefits it offered, the investment choices it had, what are the accumulation phase, how it works, what is the withdrawal phase, what are the exit rules before the age 60, after the age 60, post-retirement annuity option, how you can capitalize and leverage the annuity options, and none other than tax benefits and so on and so forth. If you have really missed this particular masterclass, last time, you can always go back on our page and see the recording and dwell more on this. So with this, let's begin our today's topic, building blocks to financial well-being. Now, throughout this session, we will explore the important elements which will set the bedrock for your financial journey. We will start with understanding the personal finance in India, which is having a diverse economic landscape and cultural influences. Well, this will be setting base for your strong financial foundation and a financial journey. What we have done is we have divided the topic in understanding it for personal finance, while as I said, this will set a fundamental base, a principle for setting your financial decisions, right? And obviously it can be a cornerstone for your entire financial well-being journey. And later on, we have divided this into four main pillars of building a strong financial foundation, which encompasses and stress on so many different aspects like creating, emergency planning. What are the components of that? Why emergency corpus is quite very important? What is the difference between a need and want? What is the old formula? How do you say all about that? Moving further, we'll delve more on how these the biases influences on our saving and spending habits. Now, understanding these biases in behavior will really help us make an informed decisions. Moving on next is it will also stress on how do you manage your debt management strategies, understanding how you can manage your liability. What are good liabilities? What are bad liabilities? And the last and the crucial critical aspects of generation profile and how to you can allocate your asset allocation depending upon the income generation, which is quite vital for you to understand how this can be knitted together to create a financial well-being journey for you. I invite you once again, all of you, to embark on this enlightening journey throughout this 1 year. And I'm sure there will be a lot of valuable insights you will gain out of it, practical tips, and I'm sure this will help to create a strong financial foundation, building blocks to create your financial foundation. So join me, in this particular masterclass. And with this, let me introduce you to our, eminent speaker, Mr. Viral Bhatt here. He's a chairman of advisory committee for qualified financial advisory, Mumbai chapter at One Finance, and he's also founder for Money Mantra. Let us have a quick glance over his rich experiences. So he has over 17 plus years of experience in the personal finance space. He took the first step by completing his certified financial planner certifications from the International College of Financial Planning in 2007. He has worked with companies like Bajaj Capital and Carvey Wealth before beginning his entrepreneurial journey. And currently, he runs Money Mantra, where obviously he helps people with their finances, which includes setting up, their budgets, helping them manage their finances, and also ensuring that they pay their taxes on time. And with this, I welcome Mr. Viral to you, and sir, over to you. And please, I'm also looking forward to enlightening journey throughout this 1 hour. Thank you. Please, over to you, sir.
Yeah, thank you, Manju. Thank you, One Finance, for this opportunity. I'm glad that today we are doing a masterclass with virtually people are right live right now, and so this is very interesting topic, and definitely being into this industry from last almost 17 plus years, this is very close to my heart as well, because the personal finance is very crucial and very critical as well whenever we are thinking of investments or thinking about our money. So let's begin our session or our masterclass today. And to begin with, so personal finance, whenever we say personal finance, is very definitely it's a very personal kind of a thing, and we are always confused about what to do with our money. So whenever we are thinking that what to do with our money, then the building the foundation is the most important and most critical part. So today in today's masterclass, we will try to understand how you can build the foundation, and you can start your journey considering the financial well-being of yours, right? So to begin with, I wanted to give you some perspective that whenever people are thinking about money, and before that they always feel that why I'm with struggling with money or struggling financially. So these are the five things. I personally feel that these are the five things are very crucial whenever most people feel that they are struggling with their money or their personal finance. So definitely income, bills, lifestyle, no savings, and debt and loans. So these are the things. These five things are, yeah, actually it's a vicious circle, right? If you see step by step that when I'm earning the income, then I am a spender. If I'm a spender, I'm spending on myself, I'm spending on my family, right? So so I have to pay the bills. So whenever the expenses comes, first in my mind, bills comes into my mind. I have to give the money to my vegetable vendor, or I have to pay the money to my maid, or certain compulsory expenses from my side I have to taking the into my overall finances, right? Then it comes to, apart from the compulsion kind of expenses, it comes to the lifestyle expenses. And although I personally feel that from last many years, the lifestyle expenses took over this compulsion kind of expenses in their life, but these this pattern, when we are saying that we are earning the income, we are spending money, expenses, maybe bills, compulsion kind of expenses, or a lifestyle expenses, then it comes to the savings part. ये सब होने के बाद मैं सोचता हूं कि कुछ तो मुझे सेव करना चाहिए, राइट? Actually, if you see fundamentally, so we are talking about today in our masterclass about building the strong foundation, right? So when we are talking about building the strong foundation, the most important thing is that as far as personal finance is concerned, you should think first about savings and investments, and then whatever the money left in your hand, you should think about the expenses part. So but this is the, as we say that this is the vicious circle, and we trapped into that. We do the all the expenses first, then we go for the savings, but बाद में तो कुछ बचता ही नहीं है, क्योंकि मैंने expense ही इतना कर दिया होता है कि no money left in my hand, right? So apart from that, another from last, let's say you can say from 10 to 15 years, this debt part, the liability part, and currently the most trending part is buy now pay later kind of a thing comes into our financial life. And if I say that it's a for the most of the people, it's kind of a trap where they get into this those debt kind of a thing. They have many credit cards with them, they don't pay their bills on the time, and this kind of a thing that's stuck between the whole thing. And they ultimately they not able to build their or they not able to start their personal finance well-being in a track, right? So let's see further how we can solve this particular this vicious circle, how we can come out of this particular vicious circle. That is most important part, and that we will learn in today's masterclass. So whenever so these things we are not saying, or I'm not saying in air, because we have done a certain study, and there are many research papers also comes into the market, where there are 60% people don't have their finances sorted, right? This is a most important part, that people have to understand, that individuals said that they find it difficult to deal with multiple institutions. So whenever it comes to managing their money, managing their finances, they found difficult to manage and difficult to engage with multiple organizations. Then too much excessive information right now available in the market. This social media era, where the information comes in a seconds or in a minutes in your hand. 73 percent people say that individual find it difficult to acquire information and understand financial products. So information is available largely, no doubt about it, but it is very difficult to understand, difficult to come out कि कहना क्या चाहते हैं हम। वो याद होगा, वो मीम में बहुत ही फेमस है कि कहना क्या चाहते हो। सो विथ दिस फाइनेंस थिंग इट इज ऑलवेज बी लाइक दैट मैं कौन से वर्ल्ड में आ चुका हूं और ये कहना क्या चाहता है। सो ये this point also we have to consider, and we have to think about it, that how to solve a difficult thing, difficult personal finance thing in my personal financial life. Then 60% influence financial decision, definitely. Whenever and if we ask to our parents, so definitely they will say that मेरे पास LIC की पॉलिसी है, right? So whenever they say that LIC की पॉलिसी है, तो जो इन्वेस्टमेंट्स और कुछ सेविंग्स की बात आती है, तो इट इज ऑलवेज लाइक अ LIC की पॉलिसी रखी है मैंने। सो right now, actually, if you see that there are many things that we have to consider whenever we are planning our personal finances. So as far as 60% individual financial decisions are influenced by spouse, family, colleagues, क्योंकि हर एक फ्रेंड जरूरी होता है, राइट? वी से दैट। सो मेरे दोस्त को पूछ लिया, उसने कहाँ पे स्टॉक पे डालने के लिए एडवाइस कर दिया, एक कोई म्यूचुअल फंड लेने को बोल दिया, या तो मेरे फैमिली में कोई ना कोई एजेंट था, ही और शी सेड टू मी दैट ये इंश्योरेंस पॉलिसी काफी बढ़िया है आपके लिए, यू बाय इट। सो दिस इज अगेन अ बिग प्रॉब्लम, where 60% people are going and influenced by their family and friends whenever taking the decisions about personal finance matters, right? This is a worry part. 81% are into stress. Individuals have reported mental distress, health problems, and lower morale due to financial difficulties. And just go back 2 years before, or 2.5 years before, when COVID hit right in our life. In that time, there are many people are struggling with their finances. People sadly dying, and in their family, they people don't know that कि उन्होंने इन्वेस्टमेंट्स कहाँ पे किया हुआ है, फाइनेंसिस प्रॉपरली मैनेज्ड है या नहीं है। सो दिस आर द थिंग्स, this all, and with this all leads to divorce have been caused by financial difficulties, 35%. So what I'm trying to say here is that let's take this five report published, these 5 particular pointers, where they touch base that personal finance is very important subject, very important to understand, and not only understand but implement wisely. That is also important whenever we talk about, or whenever we think about personal finance. So what is the solution, right? Definitely there are many things that we talked, and but ultimately it boils down to solution kya hai. So definitely financial planning. So whenever we say that financial planning, so financial planning is most important aspect. So kabhi bhi humko, if you are thinking that let me sorted out my finances, let me sorted out my personal finances, then one word you should keep in mind is that financial planning, right? So financial planning, there are in financial planning there are 7 things you have to consider. That one is tax planning, second insurance planning, investment planning, retirement planning, estate planning, cash flow planning, and liability planning. So all these put together, 7 planning put together comes under financial planning. And definitely we will talk in detail how to go about it, how to approach it, and what things you should keep in mind whenever we are discussing the financial planning thing. So why I'm saying that financial planning is important, definitely we discussed about a few things. We discussed about the report and that survey happened in the market, and it's a very practical problem, we know that. But these things are equally important whenever we are thinking about financial planning. So broadly, whenever we don't know about financial planning, broadly we don't know about financial planning, we should know these things most importantly. Let's say, be prepared for your emergencies, right? Be prepared for your emergencies. Increase your savings. Be prepared for emergencies. The foremost and most important first step of financial planning is to have the contingency in place, contingency planning in place, emergency planning in place. Then it comes to savings. You should improve your cash flow. Once you start building your investment, once you start doing your investment, you should try to think on the cash flow part as well. And whenever we say about cash flow, it comes like a income and expenses, how to manage everything when we talk about cash flow. Again, once we gain the confidence, we start building our savings and investment. Then it comes to about assets and liabilities. We should also know about that, okay, what is the difference between assets and liabilities, which are the good liabilities and bad liabilities, and हम जो जिसको assets मानते हैं वो सही में assets है क्या. So these all are things are very much important when we think about or when we say about financial planning, right? And apart from that, inflation secured hona chahiye, managing the risk very well, right? Tax aspect is also equally important, right? We do our investment and saving properly, we structurize everything, and it should be synced with our tax planning as well, right? So after doing all these things, it comes to financial nirvana, financial well-being, right? But yes, it's a last step, but before that we have to do all these steps as well. So whenever we see that building the strong foundation, so and let's just go beyond the finance or personal finance thing. Whenever we think about the strong foundation, एक दिमाग में एक पिक्चर याद आता है, और the block should be in proper shape, it should be strong enough, it should have a risk मैनेजमेंट एज वेल, कि कोई अर्थक्वेक आ गया या कोई प्रॉब्लम्स आ गया, नेचुरल कैलेमिटीज आ गया, वो बिल्डिंग गिरनी नहीं चाहिए, राइट? सो सिमिलरली इफ वी से in terms of personal finance, these are the strong 4 pillars of the financial foundation, right? So first, as we speak about the emergency planning, and so we are this today we are doing this masterclass on the platform of One Finance, and very interestingly, One Finance comes up with this concept called emergency planning. Although emergency planning is a very old concept, but the perspective in that particular emergency planning, they think about that you should have a contingency planning in place, right? You should have an adequate amount whenever any particular emergency or contingency comes into your personal financial life. Similarly, emergency planning, you should take care of the insurance aspect as well. And when we are saying insurance, it is about having pure insurance, not investment plus insurance. You should have a pure insurance in place, which is called a term insurance, and health insurance as well, right? So protection, emergency planning comes into the picture. Then second things, once we are sorted, keep in mind my word, once we are sorted with this emergency planning, then we should think about the savings and spending. The expenses management is also very equally important, because यहाँ पे क्या होगा कि you are focusing on the building the contingency, because see, whenever we talk about contingency or emergency planning, there are many things to be considered. No doubt, I talked about having the adequate contingency fund and the combination of the risk management, which is insurance. After that, you should know the expenses part as well. So I on a day-to-day basis, I met many people, and I simply I asked them that, do you have a budget in place? Do you know that आपका spending कहाँ पे हो रहा है? And what I feel, I always suggest them that in this digital era, there are many applications available where you can simply track your expenses. You just have to alert in your mind that whenever I spend any penny of rupee also, I should add into my that expenses management. Or let it be, if you are not very savvy or digital savvy, you can maintain Excel file as well, where you should have a total day wise bifurcation, and you can manage your expenses very well, right? So expenses management then comes to, after expenses, it comes to liability. Definitely there are good liabilities and bad liabilities, which will cover in after some time. But once you are sorted with contingency emergency planning, then comes to savings and investments and all, and then savings and expenses, and then it comes to about liability. Definitely we consider as an one kind of expenses only, but yes, there are a good liability where we are building the asset as well, right? So we will understand in detail about good liabilities and bad liabilities in some time. So fourth thing comes to the investing part. After having completion of all these three foundation steps, you should start building your wealth, start thinking on building your wealth in a proper and structured manner. Then it comes to, whenever we are saying investing, we should try to also consider the asset allocation part. So after that, after four pillars to building a financial foundation, these four things we will speak in the detail, these all four things. Then let's deep dive into the what I mentioned about the protection, about the emergency planning. So here we are, technically we are mixing two things, but two important things in a one. Whenever we are saying that you have to do your contingency planning, you have to consider the protection as well. So protection emergency planning, right? This is most important part. You are telling me, so Viral is telling you that you should have a proper emergency planning in place, right? And that also you have to consider the protection thing. How to build contingency, that is most important question, right? So the minimum amount that can be set aside for your emergency varies from person to person. It is very subjective, I know that, right? And you also know that very well. But depending on income and expenses, depending on income and expenses, one can set aside 3 to 6 months, or probably it is, as I said, that it is a very subjective. You can go beyond 9 months or 1 year as well, but it depends upon your expenses. As here mentioned, thumb rule says that 3 to 6 months of your monthly needs to help cope up with emergencies and unexpected changes. So let's assume that this thing I'm talking about before 2.5 or 3 years, when not COVID hit, when COVID not hit yet to our lives. So बहुत बार बहुत लोगों ने बोला रहेगा कि यार ये ऐसा थोड़ी हो सकता है, जॉब लॉस नहीं जा सकता है, फिर ये इलनेस एंड ऑल, इट इज वेरी, आप कोई प्रोडक्ट के बारे में चिपकाने की बात कर रहे हो, यू आर सेलिंग मी समथिंग एंड ऑल। बट ये सब चीज कहीं ना कहीं, कहाँ ना कहाँ, किसी ना किसी को हुआ है. It's a very practical thing. So what we are saying, that whenever you are thinking about emergency, or you feel that you should have a proper emergency contingency fund in place, you should try to mitigate how you can mitigate all these things in your life. Let's say कल उठ के जॉब नहीं हुआ तो क्या, right? Let's say job nahi hua, but let's say if you are doing doing your job very fine, right? But suddenly you very fine day you think that I wanted to start my own business, right? You should have an adequate corpus for that, right? If you have a maintain if you are ready for a job loss kind of a thing, similarly you should think about that. If I wanted to build my own business, right, then how I can build. So for that you should have a properly emergency or corpus or contingency fund in place, right? So these things you should keep in mind whenever you are trying to build your contingency corpus. Similarly, consider a recent unexpected situation you have faced and how much it cost. This will give you an idea of how much money you may set aside for an emergency fund. So hypothetically, so see, I always say that whenever you are thinking about personal finance, three situation: your past, your current, and your future. These three things are very, very important for your personal financial life, right? So this thing I'm talking about future. Hypothetically also you have to think that how you can, if any emergency arises in your personal financial life, then how to mitigate that emergency for your personal financial life. So these are the steps, and these are the steps. Definitely it is very much relevant whenever you are thinking about maintaining having the uh, emergency contingency planning for yourself. Set a realistic goal to save a specific amount by the end of year or two. So see, we talk about how to do it, right? Or in terms of numbers we have given you that 3 to 6 months income or expenses you should set aside. But कब करना है, राइट? ये कब करना है, ये एक्टिविटी को आपको अगर प्रैक्टिकली इफ यू वांटेड टू इंटीग्रेट योर इनटू योर पर्सनल फाइनेंशियल लाइफ, कब करना है? सेट अ रियलिस्टिक गोल टू सेव अ स्पेसिफिक अमाउंट, राइट? एंड देन by the end of year or two you have should have a realistic figure. Establish a monthly goal based contribution and deposit system. So for that you can do a many instrument. Let's say you can do a normal recurring deposit as well for having the contingency planning. You can you can invest in a debt mutual fund as well, right? The most important part here is that you should have a discipline, right? अगर वो सेविंग अकाउंट में भी रहता है, right, and you are very much sincere and you are managing and maintaining everything properly, अगर वो सेविंग अकाउंट में भी रहता है तो दैट्स फाइन. बट अगर वो सेविंग अकाउंट में रहकर अगर वो खर्चा हो जाता है, then that it can be a very dangerous for you. So you will not able to maintain your contingency or emergency fund. So for that, establish a monthly goal based contribution and deposit system. So you should have a proper deposit system or deposit or investment system where you are building a corpus for your emergency fund. Then monitor monthly expenses and reduce non-essential expenditure. So whenever you are doing the exercise or you are noting down the expenses, which I already conveyed to you, that you should have a proper budget or expense management system in place, and that whenever you are doing that, you should have a you should know that कौन सा essential है, कौन सा essential नहीं है. Priority, you have to set your priorities whenever you are doing any expenses as well, right? Then reallocate lump sum receivables such as work bonus and tax refunds towards your emergency fund. So definitely if you are working into a salaried job and you are you are working somewhere, definitely tend to get some kind of a bonus or incentive in our work life, right? So make a habit of that some portion sorry, some portion of that particular incentive or bonus you should set aside for your emergency planning or contingency planning. Then allocate windfall gains like a gift or inheritance. So maybe you will get some kind of a gift or inheritance from your family or something like that. That also you can consider for your building a corpus for your contingency or emergency planning. Or any kind of a maturity might be जैसे मैंने कहा कि आपके पापा ने कोई LIC की पॉलिसी ली होगी आपके नाम पे, right? So that can be matured right now or probably in a 1 year's time or 2 years time or a 6 months time. Then you should try to consider that amount to build your corporate contingency fund, right? So these are the 5 steps how to build an emergency fund for yourself, right? Excuse me. Yeah. So insurance protection. So as I spoke about that, this we consider insurance protection into this emergency planning, and it is very well connected. That's why after building a corpus of contingency fund, we are I would like to give you the perspective on the insurance protection side. So two clear things: life insurance, which is pure life insurance, right? And health insurance. So these 3 things are important whenever you are saying that you should have a pure insurance. Provide financial security in your absence. If you are not there for your family, any unfortunate event has happened in your life, right? You are not with your family, you are no more right now, then this pure insurance, this term insurance, is a savior for you, savior for your nominees, savior for your life members, right? So it will help maintain a same standard of living for your family, and most important, it will take care of liabilities. Any loans you have take, if you are not there, loan you have to pay, no doubt about it. If any expenses, definitely family expenses will be there. If you are not there, expenses तो चलते ही होंगे. तो वो सब चीज को कैसे प्रोटेक्शन दोगे? So whenever you are building emergency planning or contingency corpus for yourself, you should try to focus on the insurance side as well. And in insurance, life insurance, pure term insurance, and similarly, you should have a adequate, adequate health insurance, adequate and apart from your corporate insurer. So it might be, if you are a salaried person, you might be your corporate or your company will cover yourself or your family with corporate insurance cover, but it will not be a very sufficient for you for sure, right? So you should start thinking on those lines where you should have a separate health insurance as well for yourself, right? So, and yes, most important part, again, I have to mention that COVID era, where we came to know that अगर health emergencies हमारे life में hit होती है, और कैसे severely hit हो सकती है, impact ला सकती है, और see why this all things are connected to financial planning, because see, financial planning ultimately connecting with your money end of the day. If you are not having adequate health insurance, or if you are not having term insurance, then लोग क्या करते हैं, आपने इन्वेस्ट कहाँ पे किया है, आपके एफडी में कितना पैसा है, आपके सेविंग अकाउंट में कितना पैसा है, राइट? सो बिफोर डूइंग ऑल दीज थिंग्स, यू शुड कीप इन माइंड this insurance protection for your life before investing, right? First thing first, contingency planning. Second thing, insurance protection, and then it comes to that assets, liabilities, and investments and all, right? So health insurance definitely helps in pandemic situation like COVID as well, right? So let's go further. I think I'm having more 20-25 minutes. So let's deep dive into the savings and spending expenses management. So see, whenever savings and spending comes into your mind about uh, doing savings for yourself and simultaneously doing the expenses, these two things comes every every day in your mind, that it is whatever I'm doing, whatever expenses I'm doing, they are needs for me or they are wants for me. So if you understand well this particular concept, that's need and wants, then you can have a very better management of your savings and expenses, right? So you should keep in mind, you should have this all needs in your mind, right? And whenever wants comes into mind, this you should have a clear bifurcation of needs and wants. Might be it is sometime it will be a very subjective, right? It may differ from person to person, but in general, so we are talking about foundation today, right? So building a strong foundation, building a proper structure foundation, then this needs and wants you should keep in mind. And so see, I'm sure that 90% of people in India are following this particular formula, right? This पहले इनकम होती है घर पे, पहले इनकम आती है बैंक अकाउंट में, राइट? देन I always think about expenses, right? As we discuss about the compulsory expenses and then lifestyle expenses, and then we think about कि भाई जो बचेगा that we will invest or we will save first and then we will, अगर उसमें भी कुछ बचेगा तो we will invest, but फिर सेविंग में कुछ नहीं बचता है, ठीक है, सेविंग जीरो हो जाती है. सो दिस इज अ वेरी वेरी ओल्ड फॉर्मूला एंड as per my interaction with many people, many individuals, I feel 90% of people are doing this. But yes, 10%, the smart people are always also focusing on this aspect. This is the new formula that definitely income is coming to you, then you are thinking about your savings, right? पहले सेव करना है, पहले इन्वेस्ट करना है, और फिर जाके जो बचेगा एक्सपेंसेस करना है. So definitely this can lead to the fulfillments of your financial life. So what I do, what I tell to people, that let's how to do it, this particular thing. It is very easy to say, right? Viral bol to raha hai, it is very easy to say but difficult to implement. What you can do is that, let's say you are getting the salary on the first day of the month, right? First to one first date to fifth date of the month, you do your all investments, right? Whatever the recurring deposits you may want to do, or whatever investment you wanted to do, पहले 5 या 10 दिनों में at least you should focus on the savings and investment part. Then later 10 days, later 10-15 days, you focus on the expenses part. And in that expenses as well, as I mentioned, it's a compulsion kind of expenses and the lifestyle expenses. So after doing your compulsion expenses, you focus on the lifestyle expenses. तो पूरा महीना फिर accordingly you can bifurcate and you can focus on this aspect as well. And so ये नहीं हो पाता है, राइट? तो पीपल स्टिल, मैंने बताया कि व्हाट यू शुड डू एंड हाउ यू शुड डू, बट स्टिल there are roadblocks in your way, right? So the biases are the roadblocks for you, right? So maybe the herd mentality bias, overconfidence bias, and self-control bias. So these three biases influencing your saving and spending decision. So you should, whenever you think about something, about doing this on a structured manner, or you are probably not doing into such structured manner, then you should try to focus on these three biases, how to overcome it, right? How to overcome these three biases in your personal financial life, right? So this maybe, after understanding these all three biases, you overcome them and make better financial decision for yourself. It is difficult, I know it is very difficult, but you can start. So we are talking about a building a foundation, right? So building will be a step by step activity for you. So go step by step, go one by one, and let observe and review it as well after certain months or after certain years, that am I correct, am I not, or whatever the decision you want to revise or review yourself, or you wanted to change in your financial life, you can do it. So after this, I think so whenever once expenses sorted for us, savings sorted for us, then it comes to the most important part, that debt management. And whenever debt management comes, it calls as a liability management as well. So this is the most important concept, and I talked many a times at many forums, and in many I wrote many articles on this particular concept. and this is a, a known point. Actually, it is very known point about good and bad liabilities, but people are ignoring, right? So whenever you are taking any particular liabilities or you are thinking on the liability side कि भाई कोई liability मेरे personal financial life में enter होने जा रही है, then you should think that there are good liabilities as well and there are bad liabilities as well. So you should try to differentiate, right? अगर आप घर खरीदने के लिए liability ले रहे हो, then yes, it is a good liability. If you are taking a loan, right? If you are taking a gold loan, you are depositing your loan, your asset, and you are taking the liability, then it is a good liability. And maybe loan against collateral, or even in, I can say that education loan also a very good liability. Why? The bottom line is why I'm saying that it is a good liability, because it's building a asset for you, right? And these are not building any asset. Personal loan, not building any asset. Credit card loan, not paying credit card bills on the time, it will create a liability for you, it will create a debt for you, hence it's a bad liability. And most popular, many people are taking a car, purchasing a car on a loan. I simply say to them that if you wanted to buy a car, it's no harm, definitely. I'm not saying that not to buy a car, but you plan for it, you save for it, you invest for it. And then once that amount is ready for you, then you go for it. Rather than buying on a loan, auto loan, going for a loan, it is a bad liability for it. It will not create asset, because car or any vehicle in that case, it's a depreciable asset, right? So keep in mind, good liabilities can be bad if you are overexposed, right? And bad liabilities can be good. Bad liabilities can be good if taken for a luxury or experience that you can financially afford, right? If you can build, where you have a contingency in place, if you have a risk protection in place, right? If you have your cash flow is very manageable, then definitely you can think about bad liabilities as well. But if you are not financially affordable person, then you should avoid bad liabilities in your personal financial life. And then here comes the most important part. Maybe I think I'm having 10 minutes more to speak on this important subject, which is investing. Not only investing, but investing and asset allocation. So you can say this power of compounding. We know that we say always that it's a eighth wonder of the world. I don't know किसने बोला था ये eighth wonder of the world, but it is. If you see this, it's look like a wonder of the world. Why? So see, investing. Whenever we are talking about investments or investing in any kind of a financial product, we talk about the return aspects, the liquidity aspect, the taxation aspect, right? And people are mainly those who are doing investment in a disciplined manner, or having the structured approach towards investment. This power of compounding, they are many a times what happened that they are lacking that particular aspect, that ये ऐसा भी कोई चीज होता है, मैं जब इन्वेस्टमेंट स्टार्ट करता हूं या मैं इन्वेस्टमेंट करते आ रहा हूं. Why I am saying power of compounding is important? I am having one hypothetical, although it is very practical example. Let's take example of Shamu and Ramu. Shamu start investing at 12% per annum in any particular mutual fund, let's say, compounded yearly an amount of rupees 20,000 for 6 years, and then stop investing, right? So उसने सोचा कि 6 साल तक मैं 20,000 पेमेंट करता हूँ, 25 साल एज थी और 25 से 31 ईयर तक उसने कंटिन्यूसली स्टार्ट किया. अभी सिमिलर वे में रामू उसका दोस्त था. रामू थिंक दैट ठीक है, शामू स्टार्ट कर रहा है, आई एम नॉट कंफर्टेबल, आई स्टिल वांटेड टू अंडरस्टैंड द इन्वेस्टमेंट, आई एम कंफ्यूज्ड, आई डोंट नो अबाउट दिस, आई डोंट नो अबाउट दैट. एंड फर्स्ट 6 years निकाल दिया, रामू ने कुछ नहीं किया, रामू ने कुछ नहीं किया. रामू स्टार्टेड इन्वेस्टिंग आफ्टर 6th, यानी जब से शामू ने स्टॉप किया था तब से रामू ने स्टार्ट किया. Simply what I'm trying to say, that option 1, this option 1, Shamu 1, sacrifice now and enjoy later, right? So usne initial year, so why, what we are saying here, that to start at a right time, right? And if you start at right time, then power of compounding comes into the picture, right? Option 1, sacrifice now and enjoy later. Option 2, enjoy now and regret later. So what we are stating here is that you should start your investment on time. If you start your investment on time, then power of compounding comes into the picture, and it will create wealth like anything. So it is not everything like a sacrifice now, but if you consider everything, if you are building a financial foundation for yourself, and if you are thinking on those lines, then you should consider all the aspects of building a foundation life for yourself, right? So when we are talking about investing, then definitely this power of compounding is very, very important, and you should try to give more time, you should try to give more patience, right? You should try to give consistency and sincerity in your investment. If these all things comes into the picture, then definitely power of compounding is really eighth wonder of the world, and it will give you the wonder wealth creation for yourself. And similarly, you should also understand this very, very unique concept, right, which is called generation profile. So as we discussed some time back, that we are influenced by our family members, we are influenced by our friends, we are influenced by some our चाचा मामा जो एजेंट हो सकते हैं, राइट? सो हम उनसे इन्फ्लुएंस हो जाते हैं, और वो इन्फ्लुएंस होने की वजह से क्या होता है कि वी बाय अ रॉन्ग प्रोडक्ट फॉर आवर सेल्फ. सो व्हेन इज इट दैट पर्टिकुलर प्रोडक्ट इज राइट फॉर मी, वो कैसे पता होगा, कैसे पता चलेगा रादर? सो you should focus on this generation profile. Why generation profile? So these three generation types falls into a different perspective altogether. Determined individual who, despite limited education, provides the family's basic necessities and is a primary bread earner. So whenever you are thinking about investment or building a foundation of your financial life and all, you should try to see that in which generation profile you are fit into, right? According to your age, according to your behavior, you have to select, or you have to invest in such kind of a product, or you have to take such kind of action for yourself in your personal financial life. So these three generation profiles are very much and very important for your personal financial life. In generation 1, determined individual who, despite a limited education, provide a family basic necessities and primary bread earner, earning for a basic sustenance, prioritize stability and security over thinking risk with their finances. So this generation profile basically connected to your behavior finance, right? So how you approach towards money, how you behaviorally approach towards money, these things are very well important whenever you are thinking to building your personal financial life, or you are wanted to being get into the financial well-being or financial nirvana for yourself, right? So keeping in mind all these generation profile, analyze it yourself once whenever you are uh, seeing this particular thing. Keep in mind, note it down, and then think that how should I shape up my personal finances. And so let's say I have decided that I have to start building, I have to invest in certain financial product, I am into this generation profile कि मुझे ऐसे ही करना होगा, ऐसे ही मेरे फाइनेंसिस को आगे लेके जाना होगा, I'm building, I'm having my own financial advisor with myself, and I'm interact with him on a day-to-day basis, or in a periodically I'm interact with him on the personal finance matter. Then it comes to that key, which category of investment asset I have to choose, right? And definitely the most important mantra here is that don't pull all your option in one basket, right? This is most important कि आई एम इक्विटी सेवी गाय, मुझे तो सिर्फ इक्विटी में ही डालना है. आई एम वेरी कॉशियस पर्सन, आई वांटेड टू इन्वेस्ट इन अ डेट ओनली, right? I am a real estate guy, I only I having faith in a real estate. It should not be like that, right? Whenever you are structuring your personal finances, whenever you are building your personal finances, you should know that you should not pull all eggs into one basket, right? This is most important mantra whenever we are thinking about investment and investing in any particular asset class. So you should have a equity as well, you should have a debt as well, you should have a real estate as well, you should have a passive income as well, and similarly you should have a alternative investment as well in your portfolio. So investment option, definitely you should diversify. You should know that how much to diversify, at what percentage I have to diversify. These are the nitty gritty you should also know whenever you are building a financial plan, financial investment plan for yourself, right? So definitely no one size fits for all. You should adequately, according to your behavior, according to your generation profile, according to your risk appetite, and according to your financial goals, and according to your cash flow as well, you have to diversify your investments. And then definitely everything will be in place step by step. We have discussed many things today. So quickly, I'm having 2 minutes, and just key takeaways from my side, that मोस्ट इम्पॉर्टेंट, सेव फर्स्ट एंड स्पेंड लेटर. और ये बात तो मैं ऐसी है, मैं हमेशा सबको बोलता हूँ कि ये आपको, अगर आप नींद में भी हो और आपको कुछ पूछे जगह के, तो ये सबसे पहले चीज है. यू हैव टू रिमेंबर वेरी वेल दैट save first and spend later. Practically very difficult, I know that practically it is very difficult, but try to make a habit of that. Try to analyze, try to review it, how to do it, that we already explained today to you. Try to focus and have a deadline for that, how to build this particular thing in your personal financial life. Create an emergency fund at least 3 to 6 months for rainy days. Secure yourself with an adequate life and health insurance cover. Always have a balance between good liabilities and bad liabilities. Diversify your investment in a different asset class. And last, always review your financial plan and seek guidance from a qualified financial advisor. एडवाइजर होना बहुत ही जरूरी है, सारथी होना बहुत ही जरूरी है, हैंड होल्डिंग होना बहुत ही जरूरी है whenever you are thinking about your personal financial life. Thank you very much.
Thank you so much, Viralji, for really enlightening us. And really, I mean, for me, there are a lot of myths which really got busted today in understanding really, save first, spend later. And the most important is, like, understanding the good and the bad liabilities, right? And also the biases which really influences our spending and the saving habits. So, and obviously the generation profile was a, really an eye opener. Like, the generation one, which stresses on basically people who I would say roti kapda makan,
Makan.
basic necessities.
True.
Right? Generation two are really skilled professionals who are not new to the
Investments
financial
in financial
investments.
world.
So really look into it. And third, obviously the Gen Zs who are the early adopters.
Early
And
adopters.
you also spoke about the diversification, where alternative investments that you really spoke. And I'm sure, like, these generation profiles, understanding the behavioral biases, and a lot of things that you really explained would really help our audience also to enlighten. And obvious at One Finance, it's our endeavor to really help you make informed decisions with such most transparency, honesty, so that you can have your fulfilling journey. With that, we open the floor for a Q&A. We request you all to put your queries or questions related to whatever we discussed today. We also will be really happy to take all the questions. We just have received one question now. We'll read it out, that we'll answer that, and at the same time, those who really want to ask any of the queries, please post your questions in the comment sections. So there's one question, asked by Mr. Daneshwar Ganage. He's saying where to park the emergency fund and how to maintain it.
Right. So I mentioned few things. Whenever you are building your personal finance contingency or emergency fund, then first thing first, yes, if you are a very disciplined person, and it shows that you have asked this question, that you are a very disciplined and sincere person, then in that case you can build your contingency fund into a fixed deposit or a recurring deposit, or in that case you can think about short term debt fund as well, where for 3 to 6 months or for a 9 months, or let's say if you are focusing on only on into the contingency side, right, or emergency side, then you can have any debt fund where you can liquidate at any point of time. Sure. Right, whenever emergency occurs in your personal financial life, then you can exited from that particular corpus, and you can fund for your contingency thing. And one more thing here I wanted to say, that similar thing, that you should also diversified in that as well. You should have some amount into fixed deposits, you should have some amount into recurring deposits, you should have some amount into a debt funds as well.
Sure. Thank you so much. There's another question which is coming from Shamir Sheikh. Since debt funds are into tech slab from this year, what would be the best place for emergency fund other than debt funds? I'm sure, I know you have already spoken about it. Maybe if you
so if you understand the risk aspect, whenever we are saying about any particular product, sure, you should try to understand the risk aspect as well. So recently, or you can say last 2-3 years, there is one product called peer to peer lending, P2P. Yes. That is also one very good investment option for the contingency or emergency planning. It's a debt alternative only, where you can park your money practically for 1 or 2 days as well, or you can have a investment for a 3 months time or 6 months time, or you can just park it, and whenever you want a liquidity, you will get your return money back with particular returns, right? So after this debt taxation, the P2P option is a very good option.
Sure. I think these are some of the questions that we really have. Any more questions are more than welcome. We still have 1 minute to take your questions. Okay, one more. From Shamir itself. How much shall be the diversification in equity, gold, debt, real estate, etc.?
It's not.
He's asking the asset allocation.
Yeah, asset allocation, but it is very difficult to answer in a very short time, because definitely, if you have a financial advisor in place, he or she will definitely analyze your behavior, your risk profiling, your cash flow thing, and then after analyzing everything, it boils down to how much percentage you can allocate into which asset class. So it's not one fit answer for this particular question, but definitely you can get in touch with any particular your qualified financial advisor, and they can definitely help you out on the this diversification aspect.
Sure. Thank you so much, Viralji. The last slide, we also have magazines and blog sections on our One Finance website. It's really hyper personalized, I would say, or curated for a lot of the queries. We spoke about generation profile. We spoke about anybody who is really looking out for some very good info, some very curated blogs and magazines. You can please go, and one of which related to this topic today is 7 ways to achieve financial freedom. There's a link here. You can always go there, vouch for it. There is so much of information that I'm sure would really equip you to take informed decisions and have a peaceful and fulfilling journey. With this, I really thank you all for joining this masterclass. Goodbye. Thank you and have a good evening until next masterclass. Thank you so much.